All right, welcome to the deep dive. Today, we're going to be jumping into NatWest Group. We're going to be looking at their 2024 performance, trying to figure out where they're headed. You actually shared their 2024 annual report. You want to get a better sense of where they stand now, where they might be going. We're going to cover, the key trends we see in the different parts of their business, some of their financial highlights, and how they're aiming to deliver value to shareholders.
Yeah, absolutely. And, I think what will be particularly interesting is looking at how their different segments are performing, what the financials really tell us about their overall health and, what their strategies are for growth, especially because we're still in a pretty uncertain economic climate.
Definitely, yeah. It's a bit of a roller coaster out there, isn't it? And this report is a big one. Like it covers a lot. It goes from their core strategies to how they're growing their customer base. Even the UK government reducing its stake in the bank, their overall financial health, and then their future ambitions. And the common thread through all this seems to be this idea of customer success.
Yeah, that's a really good point.
So let's actually start there. Let's jump into those business segments. What really struck you when you were looking at, the trends, their growth strategy, initiatives they've launched, and, what challenges are they facing?
Well, what really stood out to me was this central goal that they have, which is to succeed with customers. They really emphasize that if their customers are doing well, then the bank will do well too. They've set out these strategic priorities and seem to have made real progress in 2024. And this is all despite, like we said, a pretty volatile economic backdrop, right?
For sure. They're talking about focusing on what they call attractive segments for growth and good returns. Can you break that down for us a bit? Like, who are they targeting and what's the plan there?
Yeah, so they're really trying to connect with younger customers, which, makes sense if you're building long-term relationships. They also highlight, their position as the leading bank for startups in Britain. So they're showing a commitment to supporting new businesses. And then, another key focus is growing their assets under management and administration. So essentially that points to a drive in wealth management and investment services. So it seems they're trying to tap into these areas where they can see growth potential right from the start.
Yeah, like getting in early and growing with these customers. And also, like you said, looking for those good returns, right? Now, their purpose as a bank, it's also evolved a bit, hasn't it? What's the wording on that now?
Right. So their purpose statement is now the bank that turns possibilities into progress for their customers. That really boils down to understanding what customers want to achieve, whether it's like buying a home or expanding a business, and then providing these tailored services that actually help them get there.
Okay, so it really does tie back to that whole succeed with customers idea. That makes a lot of sense. Now, another big theme here is simplification and all the investments they're making in technology. They put a considerable amount into tech in 2024. Why is that so crucial for them right now?
I think, taking a step back, that 1.1 billion pound investment they made in technology in 2024 is all about becoming more efficient and agile, which, ultimately should translate to a better customer experience, right? They're using data to try and understand your needs better. And then, of course, serve you through, whatever channels you prefer, whether that's online, on your phone, even through voice interactions. So this is helping them streamline their operations and, become more efficient internally, too.
And they give some specific examples in the report of this digital shift in action.
Yeah, definitely. So like in their retail banking division, they're up to 79% of customers banking completely digitally in 2024, which is up from 77% the year before. Their commercial and institutional clients are also increasingly digital first, with 83% using digital channels mainly. Even in private banking, digital payments are just the standard now. It's at 94%.
Yeah.
What's really interesting, though, for, anyone thinking about getting a mortgage is that they can now get an offer within 24 hours through digital channels, and they've managed to reduce the average time from application to offer by 20%.
Yeah, that kind of speed and efficiency with something as big as a mortgage, that's a game changer. Now, they also talk about being in a strong position in the loans market.
Exactly. They've held on to their leading market share in a market that's actually growing. And what they're doing to broaden their reach is they launched this whole of market lending back in November 2024. And this essentially allows them to offer loans even to customers who don't have a NatWest current account. So that's further expanding their lending business.
Interesting. So it sounds like a lot of what they're doing is really powered by these digital improvements. And they list a bunch, from online banking to their virtual assistant Quora plus.
Yeah, I think what really jumps out is how many people are going digital. 79% banking fully digitally, and a huge 93% are getting their needs met through those digital channels. And the fact that around half of eligible customers are using voice self-service, that's pretty impressive. And then, yeah, you mentioned Quora plus Val, their AI-powered virtual assistant. Well, that's handling around half of all customer conversations and has a customer satisfaction score of 66%. So, that's not bad. And then you see things like the new travel account in their mobile app, which offers fee-free euro exchange. That shows how they're using tech to add value and, potentially save you money.
Yeah, absolutely. Now, let's not forget about their private banking arm, which also seems to have had a pretty stellar year.
Right, yeah. They're managing a whopping 109.5 billion pounds in client assets and liabilities. And they saw over 12 billion pounds in growth this past year. And their return on equity in that division was 14.2%. Plus, they saw an 11-point jump in their net promoter score.
Mm-hmm.
So, that's that measure of customer loyalty that all points to a strong performance and, growing client satisfaction in that wealth management space.
Definitely. They also had significant growth in customer deposits. What do you think is driving that?
Well, that 12.5% year-on-year increase in customer deposits, that's mostly due to the improved digital journeys they have for their savings products. It's making it easier, more appealing to save digitally. That's clearly paid off for them. And of course, having that large deposit base gives them a healthy loan-to-deposit ratio of 43%. That shows they have plenty of funds available compared to the loans they've issued.
So it sounds like they're adapting their lending in other ways too, not just focusing on, personal loans.
Absolutely. The lending proposition is definitely evolving. Like their Coutts NatWest mortgage now includes options for buy-to-let properties. They also allow existing customers to switch products more easily, which makes things more efficient on the bank side. And then they have this partnership with NatWest Markets to offer interest rate hedging solutions for their commercial clients. So they're using their expertise across different areas to, retain that valuable loan business.
So it's about connecting the dots and offering more complete solutions. Now, they also mention investing in customer data. What's the strategy there?
Well, investing in customer data is all about personalization and efficiency, right? They want to really understand what you need so they can give you more tailored services and information. And of course, ultimately, that leads to better engagement with the bank. It also helps them meet regulatory requirements more effectively by making things easier for customers and using open banking. And, it's interesting that they've introduced this AI and data ethics code of conduct and a specialist review team. They're clearly thinking about using this data responsibly.
Right. Makes sense. Of course, with all this going on digitally, you got to think about cyber attacks, right? It's got to be a major concern.
Oh, absolutely. They talk about the constant risk of cyber threats and how those threats are evolving, increasingly influenced by, what's happening in global politics. And this is an ongoing challenge for all financial institutions, and NatWest is definitely no exception. They're constantly having to, dedicate resources to protect themselves and their customers.
Yeah, it's a never-ending battle, isn't it? Okay, so we've got a good picture of how the different parts of their business are doing and their strategies. Let's move on to the financial highlights for 2024. What are the key numbers we should know? What are the big factors that influence those numbers?
All right, so their operating profit before tax in 2024 came in at 6,195 million pounds, which is just a little bit higher than the 6,178 million pounds they had in 2023. And then their profit for the year attributable to shareholders, that was 4,519 million pounds. So that's 2.8% higher than the previous year. And this increase was mainly because of a lower impairment charge, although they did have higher costs overall. And a lot of that's just down to, inflationary pressures.
So the core business was fairly stable, but they were better at managing those potential losses.
Right.
And that helped their bottom line.
Exactly. Yeah. And their net interest income, which is the difference between what they earn on loans and what they pay on deposits, that was a significant 11,275 million pounds. If we look at their balance sheet, customer deposits, excluding central items, increased by a healthy 12.2 billion pounds to reach 431.3 billion pounds. And, both retail and private banking contributed to this growth.
Okay, and what about the money they set aside for those potential loan losses? How'd that look?
So their ECL provisions, their expected credit losses, actually decreased to 3,425 million pounds, down from 3,645 million in 2023. And the coverage ratio for those provisions also went down slightly to 0.83%. And what's interesting is their actual impairment losses in 2024 were much lower, only 359 million pounds, compared to 578 million pounds in 2023. Although they did write off a larger amount of debt as unrecoverable, £654 million, up from £319 million.
So it sounds like they're feeling a little bit more optimistic about future losses, but, they're still dealing with those existing bad debts.
Yeah, I'd say that's a fair assessment. There was also an increase in their other financial assets, mostly due to their activity in the bond market. And we also saw a decrease in their derivative assets and liabilities, which is related to their trading activities in currencies and interest rates.
Okay, now let's break down how each segment did financially. Which were the big profit drivers?
Well, if you look at the operating profit for each segment, commercial and institutional banking was the star performer at £3,585 million. Then retail banking came in at £2,431 million, and private banking contributed $264 million. And then their central items and other activities actually resulted in a loss of $85 million. So this shows you that their corporate and investment banking arms are really strong, and their retail operations are solid too.
Got it. All right, that paints a pretty clear picture of their financial health in 2024. Now let's talk shareholder rewards. Dividends and share buybacks, that's how banks typically do it. What are we looking at here?
Right. So the report reaffirms their commitment to a payout ratio of around 40% for capital distributions, which is in line with what they've said before. And they really stress that they're making these decisions carefully, making sure they support the long-term success of the company for everyone involved. They're taking into account, the economic outlook, their financial strength, all that.
And they've already paid out some dividends for 2024, haven't they?
Yeah, they've had an interim dividend of £498 million, which is 6 pence per ordinary share. That's up from 5.5 pence in 2023. And for the final dividend, the board is recommending £1.2 billion, or 15.5 pence per share. That's also a big increase from the 11.5 pence final dividend they paid in 2023. Of course, this is all subject to shareholder approval at their AGM in April 2025, and the payment should go out, towards the end of April.
Wow, that's a hefty increase for both the interim and final dividends. Definitely sends a strong signal about returning capital to shareholders. What about share buybacks? Can you talk about that?
Yeah, so they're asking for authorization at the AGM to buy back shares from HM Treasury. The government's still reducing its stake in the bank. The report doesn't give an exact amount, but the fact that they're seeking this approval, it tells us that more share buybacks could be on the way.
Interesting. They also have that shareholding policy for their board members, right? How does that fit into creating shareholder value?
Yeah, so this policy was introduced in 2023, and it requires the chair and non-executive directors to use some of their fees to buy shares in the company. The idea is to, really align their interests with the shareholders because a bigger chunk of their wealth is tied to how the bank does. And they have these target levels of share ownership they need to reach, and once they hit those targets, the percentage of their fees that goes towards buying shares, that goes down a bit.
So it's all about making sure that the people leading the company have skin in the game, just like the shareholders do. All right, looking ahead, what's your take on NatWest Group's prospects based on this report?
Well, one thing to note is they appointed Gary Moore as their new Group Chief Governance Officer and Company Secretary towards the end of 2024. So that brings, tons of experience in governance and compliance to the leadership team. Overall, the board sounds optimistic about the future. They're confident about building on their strong performance in 2024 and continuing to deliver returns for shareholders.
They seem to be in a good spot for that sustainable long-term growth. What makes them so confident?
I think it's a combination of factors. They have a relatively new board chair, and the group's CEO has only been in the role for a little over 18 months. That could mean fresh ideas, more energy, and then they're laser focused on that customer success, and they're putting big money into digital technology that should help them adapt to, whatever customers need as things change and, maybe even become more efficient. And, their financial performance in 2024, that was solid. That gives them a good foundation to build from. And their commitment to returning capital to shareholders, that could make their stock more attractive to investors.
But of course, they still have to deal with that uncertain economy and those ongoing risks like cybersecurity.
Oh, yeah, absolutely. Those are definitely big factors they'll need to manage carefully. I mean, the economy could change at any time, and cybercrime is a constant moving target. Their ability to deal with those challenges effectively, that's going to be key to their success.
All right, so just to sum up, NatWest Group had a pretty good year in 2024, saw growth across their customer businesses, and they're really pushing towards digital. And they're all about returning value to those shareholders through those bigger dividends and potentially more share buybacks. They've got those economic uncertainties and risks, but they seem confident about the future, and they're definitely all in on succeeding with their customers.
That's a really good summary. You nailed it.
And that brings us to our final thought for you all. So think about those big investments that NatWest is making in technology and how their business segments are evolving. What does that mean for the future of banking as we know it? How might that change the way you bank in the future? It's definitely something to think about as the financial world continues to shift and change. Thanks for joining us for this deep dive. We'll catch you next time.